Good morning, everybody. Hope you guys are doing well. We got some news happening right now. So yeah, the vibe for today, obviously, for those of you that have been with me for a while, a day before, day of, and day after a holiday is generally high resistance, low probability expectation. So, we'll see what happens. We did just have news. So we'll see what that turns into. But ideally, I'm most likely going to want to try to identify something towards the 6:30 open. But yeah, we'll see. We'll see what happens. But before we consider any engagements, obviously, we got to start looking at what the overall market is pretty much doing. And what's up, Adam? So let me make sure my brokers sign in. Okay, that one's good. Yeah, how was your guys' weekend? Adam, how was your weekend? Yeah, so when any tool seems like it's not really being helpful to us, like say the bonds and the yields are cracked in correlation with the DXY and the indices, or let's say COT, if we're doing a commitment of traders analysis and it doesn't really assist us in confirming whatever we see in price at that current moment. Whenever that's the case, you pretty much just like sideline it for a little bit. You keep in mind that because it's a little bit off, that that could lead to potential issues in terms of clarity, right, or cleanliness in delivery, I should say, especially with what we see going on in the world. I mean, there's so many things, so many bombshell things that are happening on a daily basis that the risk is automatically elevated from that. But you don't get fearful if one element of the analysis is kind of not sticking together or confirming whatever it is you see in price. You just keep it on your mind, and once you see it kick back in line with the correlation effect, then you know that there may be some reasonable delivery around that time. But yeah, oops. Yields. So let's take a glance at some of this stuff. So yeah, I did talk about on Sunday that I wouldn't be surprised if we come back in and try to reach into this level up here. Right? Nothing has changed for the narrative being bearish. Maybe that changes in the near future. We'll see, obviously. But it's, just looking at price, it's been a mess in these assets. And that's because lots of the economic policy adjustments are aimed at doing something to these specific assets. And then, of course, as a result, this dictates a lot of times what the DXY is going to do, and the bonds dictate what the foreign currencies and the indices are going to do. All right. So at the current moment, it's a bit foggy when it comes to this relationship. We got indices and foreign currencies exploding to the buy side. They have reached into some reasonable levels, right? Like this weekly fair value gap. We've got this down wick here. We have this larger one, right? Notice the midpoint of that, how price is respecting it. And we've been on a rampage going higher since back in April at that yearly order block that sent price higher, set the low that, the last couple of months, right? Since April. And that's all been a result of headlines, So they're going to do whatever the hell they're going to do, but they use headlines to obviously impact sentiment. So that sentiment was positive for the U.S. dollar, positive for the economy in the U.S., and as a result, right, we see, or it's positive for companies specifically, if you want to get even more detailed. The uncertainty kind of fell off a bit. So because the uncertainty was being cleared up a bit, there was a positive effect, So now where we're at in price, okay, I'm going to still, be of the opinion that, this movement the price has been doing in the bonds and yields, right? It's still leading to the yields, simply just looking to retrace. This is the weekly, is it a weekly? So it's a monthly wick, consequent encroachment down here. And then if we go to the weekly chart, right, we could see a bit closer. We have this wick. Okay, so let's actually clone this so I can remove the fib level, make it a bit more clean. Okay. Now we got this wick. So we came off this high and now price is retracing. It's been extremely rampaging to the buy side. And we've taken significant buy side liquidity. I mentioned that we want to watch this and see if it acts as a strong rejection, right? Pretty much it has, but nothing has upset the higher time frame narrative yet. The only way that I'd be bearish on this market is if we take out this low, or if we can violate the mid portion of this bullish order block. In that case, there'd be 1, 2, 3, 4 PD arrays, 5 that have been violated, the wicks, the gaps, the order block, the midpoint. So all that stuff being taken out, puts this low in jeopardy. Okay, and then of course if we violate this low, my attention then goes down here for more long-term view. And up until it gets down there, I would continue to press into the fact that we took buy side, now we're aiming for sell side. Okay, so for now that hasn't came to fruition yet. So it looks like it's just kind of stuck in a very choppy environment between the bonds and yields. So, that just promotes that there may be a bit higher difficulty when it comes to building clarity. It may or may not present that. Right now, we're still pretty confident that we're still going higher in the currencies. We're still going lower in the DXY. That changes if we get above this breaker, back through this high up here, and then close above this fair value gap. Why? Because that'd be 1, 2, 3 PD arrays. You can even add this as a bearish order block. So if it gets up above that level, we'd have to see how it treats that, and then we could operate potentially in the opposing view against this sell-off. Basically, we took sell side here, and now we got a rejection happening. That's not unreasonable. It doesn't sway our opinion from bearish to bullish. It just looks like we opened up. Now we're retracing after we've been accelerating to the downside and respecting these upper levels I've mentioned from the last couple weeks. Let me make these smaller. Okay, so these are all new week opening gaps that are relevant. That's why they're here. They're all present in price. So let me see why. Oh, okay, that's this one. So yeah, this is our current new week opening gap. We're inside of a previous new week opening gap. That's all overlapped by this bearish breaker from that weekly chart. Or what is it? What time frame is it on? It's on this time frame, the 2-day. Okay, so low, high, lower low. So it created a bearish breaker here. And the conversation we had about breakers last week and order blocks, hopefully you remember. So that is in play right now. So we're going to continue to monitor that. We want to make sure that price can stay below the mid portion of this bearish breaker on that 2-day chart, and see if we can, continue to respect the fair value gap here, the order block, the high, and then, like I said, the bearish breaker. This is also a weekly order block. Okay, go to the weekly 2-week. Okay, you can see that it's a bearish order block. It's a little busy. I hope it's not distracting. It just highlights a bunch of different areas that I want you to at least be aware of, like new week opening gaps. And we're gonna watch how this behaves, right? We got the open here on this 2-week bearish order block. We got the wick, got the midpoint, and we got the low. So if price can displace and get down below that, that would put my attention here. And the timing element may come from news, okay? Because remember, the news is used similarly to how the lower time frame macros are used for the lower time frame. It's just that the news events are generally used as macros or timing tools for higher time frame delivery. That's why it's so important. Most people don't look at the news like that. I don't even think ICT has mentioned it in that context. He's mentioned similar stuff, obviously. It's kind of where I made this discovery, was just watching how he operates using the news events. If we take a look at the news, we've already had one news event take place. Now we got 2 more on the way. So we'll see what happens towards the open. We're inside of the 550 macro right now, the first macro before or the last macro before the New York Open, like the actual New York Open. And then tomorrow and Thursday, all the way up till Friday, we have a decent schedule of news. So again, I just want to reiterate that the day before, day of, and day after a holiday should be looked at as possible high resistance, low probability conditions. That does not mean you need to be fearful. That doesn't mean that you come in here with an expectation that nothing's going to happen. Something very well may happen, and what we're looking for price to do, we're still looking for price to want to go higher. Okay, price is, pretty quickly accelerated to the buy side. So there's been a decent amount of delivery already so far above the open price. Generally, when it goes fast like this, it may look to want to retrace, right? Because it's in a hurry to get somewhere. You don't want to lose sight of what we've been talking about in this higher time frame as well, in terms of the market maker buy model. Okay, I said that the line in the sand for us to be switching from bullish to bearish would be if we violate these areas down here. It just seems as though we've came down, swept liquidity, hit a discount array, and now we've gotten above another bullish order block on the daily time frame. DXY looks like it just is in a state of retracement, and it looks like that's going to influence, if it can displace, it's going to influence this ability for this to get up and reach into these upper levels. We have daily highs here. Each daily candle has a previous day's high. Each daily low has a previous day's low. So if it was going to go lower, as it did here, it targeted previous day's lows, also a PD array, and it was just in a simple retracement, at least for the time being. We're still inside that second stage distribution area I've been telling you guys to monitor. I said I want to see the mid portion of that respected. If it does respect that and we can get outside of it and continue to stay in a in this type of structural manner and continue to retrace and go higher, respecting bullish order blocks, bullish fair value gaps, so on and so forth, we'll continue to want to march higher. And again, the line in the sand for me, I mean, if we violate this low, that's not something I'm very, that's not something I want to see happen. It could happen. But again, if this second stage distribution inside this large higher time frame market maker buy model is going to take place, and it's going to be reliable, it's going to have to spend little time in here. Okay, so far, this is still considered not a lot of time being spent in here, but it's going to have to make a decision and start pushing away. If it ends up displacing below this low, then obviously we may be headed towards these levels here. If they violate these levels, then we may be in for a decline. And if that does take place, to support that, we would really need to see DXY displace and then give a shift in market structure above the levels I mentioned earlier. All right, I could remove that. But yeah, we'd have to displace and get above those levels. Okay. So yeah, I'm of the opinion that this is, simply just a retracement for now, and then towards the open, throughout the session, I'm trying to look for price to displace lower here, and then set up some type of move higher for the indices. So far, it's, like I said, ran pretty aggressively to the buy side. We're outside this daily fair value gap. We could, take this low down here that started the move, like the fastest portion of this run higher, map it up to the high. We got equilibrium in here, so this is still not unreasonable. So we're going to continue to monitor how this is going to behave, given the fact that it's also the day after a holiday. We are not in a rush to take a trade. Okay, I do see equal lows down here. So again, we'll see how price wants to behave as a result of this holiday and what we've seen so far in the marketplace. If you take the flout and central bank dealers range, the Power 3 projection tool, you see that we've hit 1-2 standard deviations. So, that's ideally what we would like to see if price is going to want to go lower. But again, we got to remember the higher time frame. We're favoring the higher time frame, but of course, if it starts to show evidence that that's not what it wants to do, I'm more than happy to be flexible. We do have relative equal highs up here. I do still believe, like I said, just so it's not confused, so you don't get confused, I'm still favoring something that's going to push us to the buy side, given the market maker buy model on that daily time frame. So we'll see if that's something that price wants to continue to support. Again, we've hit this weekly bearish fair value gap. If we break this high, this candle here becomes a weekly bullish order block. But we've hit this bearish opposing PD array to this uptrend, and obviously you can see it's led to a rejection. That is generally what we see when price is running in a particular direction, in this case bullish, and then it hits a higher time frame opposing PD array. That generally sets up a time where we'll retrace, and then when you can see something like this, your eyes and attention should then switch down to the opposing view just for the retracement to set up, and then once it hits a level of significance opposed to the uptrend, like in this case like a fair value gap down below, or maybe a swing low from previous day, previous week, whatever the case may be, you want to observe how the behavior is and see if it's going to start pushing back in the direction of the higher time frame narrative we've been delivering. Okay, most people probably coming in see that price has been bullish, so they may look to victimize that. They may look to victimize the excitement that's been triggered from the rampage that price started the week with to the buy side, and they may look to come down and unseat somebody down here, right? We're still inside this daily fair value gap, so it's still using that back and forth, right? But it's hanging around, right? So we're going to want to see if that's going to be something that continues. We got a first presented fair value gap here from, was it Monday? Yes, from Monday. So we're going to want to keep that in mind. Watch how it behaves. You notice how I have a lot of first presented fair value gaps labeled. They work very similarly to new week opening gaps, new day opening gaps. They're used later on. So having these levels like in your awareness, it's obviously going to be helpful. You could just write it down on a piece of paper if you think it's too busy. Whatever you choose to do, it's fine, but you want to make sure you're aware of these levels, because they'll act as dynamic support and resistance. So yeah. Then if we look at all three indices, let's compare the highs. We do have SMT here that we pointed out. So again, SMT at the highs coupled with multiple opposing PD arrays hit across all these assets. I mean, it's just right that, they triggered in some type of retracement. Now, whether this retracement is going to be something that digs deeper, or if it's going to use this retracement we've seen to trigger in the run higher off that higher time frame market maker buy model, obviously we're going to have to continue to gauge that. So far, there's nothing telling us that that's not something that's going to be reliable. None of this price delivery in here, although it has kind of declined and, it's doing this right here, that may be convincing to some people. We're not married to the lower time frame. If this does deliver to the sell side and takes out this low, it will basically be presenting a market maker sell model, most likely just to come in and trigger these people out. And then however it behaves down there would determine, whether we're going to have an interest in looking to seek even deeper lower prices and a deeper retracement. That's not something I want to see, right? But if it happens, obviously we got to be open to flexibility. Oh snap! Sorry, I didn't check the chat. And I'm doing well, Adam. Appreciate you asking. Tony, I'm glad you think so. You've been doing phenomenal, so good job. What's up, Fritz? Because it previously showed, yeah. See, those that spend time here and don't just come here looking for a 5-minute explanation on how to master the market. Those that want to hear what it actually takes to be successful, and then see the evidence of what I teach being truthful, just by price action showing you, like Tony just mentioned, right? It happens. All this stuff happens, and we previously talk about things, and then it just manifests in the market magically, right? It must be a magician or something. But it solidifies that the things we talk about, although they're not perfect, they never will be. None of us will be perfect. They're highly accurate, 75 to 91% from the last 2 years, which I've shown live, in terms of where price is going to go. So, I mean, if I had an opinion on it, I would, say that it's a pretty good statistic, especially because it's proven live. So, yeah. So I hope that our opinion this morning makes sense. Again, we always lay the groundwork when things are going to be potentially harder to read. There's still a cracking correlation in the overall interest rate markets. And we're a day before, day of, or day after the holiday, right? We're in that time window. So you want to make sure your risk is cut in half, just knowing that. And then, of course, if you're trading opposed to the bullish idea, like say you're going to short for whatever reason, if something sets up in that direction and you're going to engage it, you're counter trend trading, so you have to lower your risk automatically. All right? And, some may not want to hear that, but, it is what it is. Okay? It's either I'm going to tell you and you're going to take it and use it in terms of your knowledge, or the market's going to force you to accept it by blowing your account, and you're going to waste money because, you know, whatever reason. So yeah, I appreciate you, Fritz. Appreciate you saying that. So yeah, we're pretty much just going to observe how this macro delivers. If we do displace above this high, I want to watch and see if this will set up a deeper run. We have another standard deviation above up here. These can not only be used as Power 3 projection tools, but that it can also be used as a targeting tool. You know, it's something most people don't know too about this specific tactic. A lot of the tools are usable in different scenarios for different reasons. They have multiple use cases. In this case, this is used for a projection based on ICT's, I think, month 8 education in his 2016 stuff, where he talks about Power 3 projections and central bank dealers range, flout, you know, all that different information. It may seem confusing at first, but, you know, just like, you know, I show for most things that I talk about and what ICT talks about, there's easier ways to internalize certain things. That's not to knock him as a mentor, because if it wasn't for him, I wouldn't know what I know. But, you know, sometimes a different voice, a different perspective, clarifying certain things that maybe weren't clarified, can lead you to kicking the light bulbs on and using a concept that you may not have thought you were going to use. You know, so yeah. So again, we are definitely seeming like we're interested in this decline here. Price has opened up for DXY, consolidated, rallied up. We've hit this bearish order block here. It's above the open price. So we're going to see what it's going to want to do here. We do have relative equal highs up here. That's also coupled with a fair value gap. So, you know, that's a buy side target potentially, these equal highs. If it does decide that, you know, it's going to fail to break the lows down here, let's take a look at these lows here and then move on to currencies. So there's a failure swing there and a failure swing here. So that's a bullish SMT for the DXY and a bearish one for the euro. There's no other SMT between the euro and GBP though. So, and again, nothing's happened in terms of, or nothing's changed on that higher time frame. Okay, it's still interested, and we need evidence to change our opinion overall. You know, and we'll be able to do that, as you guys well know. So, but we're going to stay on one side of the market, as we always do. And then, of course, if the time comes where we got to adjust, we'll go ahead and do that. And, of course, if we have to make a decision to adjust, again, you're going to want to make sure you're positioning inside some macro. Okay? You don't want to go outside of a macro. You know, you want to be at least close to them. Well, you could obviously do what you want, but the macro time windows are meant to send price towards inefficiency or liquidity based on the overall narrative. Okay, and if you know, we try to trade outside of it, which, you know, in hindsight you'll be able to go back and see, oh, there was a move here, 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 that you possibly could have engaged. But those moves that you could possibly engage that are outside of a macro started inside of a macro for the most part. You know, so that's another way you can use macros too. You want to identify a move that starts in a macro. Okay, because that's generally what happens. If you go back and study, you'll see that is extremely consistent. So yeah, we're gonna continue to watch this here, right? Sweep of the lows came to a discount, right, from this high to that low, right? Equilibrium's right here. So we're watching this high. I like how DXY is just continuing to smash, right? It's definitely something that we would like to see. So let's see how this order block is going to behave. the 5 minute. Look at the 30-second, 1 minute. So we got this up candle, right? This, what's one up candle on one of the upper time frames right here. Right, we've got a high, a low, higher high, displacement. Will this end up being a change in state of delivery, setting up the run higher? We're inside of a macro, but we're ahead of the overall open, and we're a day after a holiday. So again, we want to be pretty cautious when it comes to trying to execute. I would say that this does ideally look like a particular setup I would like to take. If I wanted to take a bit more of an aggressive stance and toss in an entry, I would have, considered this here. This high to that low, as long as that stays intact, it should act as a balanced price range. Buy side delivered, sell side delivered, change in state delivery above the high. It's also potentially an order block, as you could see. Oop, labeled it wrong. So yeah. You can see the delivery there. You could see that our assumption, the downside is probably not going to be favored, at least for the moment. It's working out. This scenario I just painted for you here for the change state delivery, price getting above that, coupled with the higher time frame narrative and us sticking to that, you could see that that perspective is allowing for fruitful engagement. And then, since I missed this one and didn't throw an entry and we're talking about something else, I would then look to move up in time frame. Okay, where is an upper time frame level I could look at to frame a somewhat similar scenario? And we could see that this high to that low, if price violates that high, given this circumstance, this lower portion, like I mentioned, should act as a balanced price range, aka an order block, aka a breaker, whatever else. This could act in a very similar capacity if we are going to continue what we see here. So this may end up offering another framework just at an upper time frame view. Right, so this will be the upper time frame setup potentially. I don't like that we are ahead of the open price though. So again, given the fact that it's a holiday or day after a holiday, I'm not going to take entries that I feel are more aggressive. I feel like this is a little more aggressive, but it is inside of a macro. So there's, reasonable ideas that could put us in line with this entry or make sense of it. But for me right now, I'm going to personally be waiting for this high here. See what happens when we get above that. And then see if we can't find something in terms of our model once we set up above that, right? Say the 8 minute gets us above this high here and it retraces back into this. That is a moment in time where I'm framing on a time frame that's above the lower time frames. Once it fulfills that and reaches into that level, I'm going to then look to switch down to a lower time frame, maybe a seconds chart, maybe a 1 minute, depends on what I see on those time frames. And if I could find my model presenting while that higher time frame framework is unloading, then that is the best opportunity to have a very solid opportunity framed from a time frame that's above the lower time frames. So that's a tactic that allows for a lot more dynamic price delivery versus just trying to drop down to the 1 minute or seconds charts and then just trying to find the model happening there while disregarding the higher time frame structure. If you could frame a setup in terms of your model on the lower time frames while you're framing the back end information on the higher time frame, like we just showed here, right? We find a setup on the 8 minute and then we drop down lower once it delivers into that to find our model. That is some of the highest level navigation you could possibly do in terms of finding setups. And that's true for us moving up even further. Maybe you find a 1 hour setting up into a bearish order block. And then, once it delivers into that bearish order block on the 1 hour, you drop down to the, 15 second, 30 second, 1 minute, 5 minute, and then you find an opportunity within that that's presenting your entry tactic. Of course, if that's also in line with the higher time frame, you could see how you start to develop a very clear picture as far as whether price should deliver, and your positioning, also using a macro. If you couple all this stuff together, your positioning becomes highly effective. That's why, for the most part, when I'm executing, although I take my set amount of points for my targeting, you see that price just takes off. Sometimes hundreds of points beyond the entry, beyond where I took profit. And that's all a testament to this concept I'm sharing with you guys. Right? It's highly advanced. It's something that obviously requires you to understand the fractal nature of price, navigating the higher time frame. But hopefully the way I just described it is not overly complex. All right, did what I've mentioned so far make sense to you guys? Because if that makes sense, again, that's another huge leap forward, like the balanced price range idea I shared with you Sunday. So, what's another benefit from what I just shared with you? Can you guys think of another benefit why that would also be beneficial, aside from just like the clarity it brings? How would this idea, if you root yourself in what I just shared, when you're framing setups, how would that impact the volume of trades that you take? Would it make you more selective? Would it make you better at identifying opportunities that have a higher likelihood of delivering versus just being on the lower time frame? Let me know in the chat what your thoughts are. I hate when it does that. For sure will help wait and choose better setups. Yeah, exactly. So what does that help you with? That helps you gain more clarity. Would you say that that's a true statement? It's adding to the clarity that you're able to achieve. It's adding to the selectiveness skill set, the anticipation of better setups. May have less setups, at least while you're learning this, because you're trying to get the best opportunities, but it's going to minimize the amount of losses you take. And then if you add, it'll minimize the amount of times that you get things incorrect or get in a move that's not worthy. And then, of course, if you add the risk protocols that we use, 1 to 2 trades a day, if you take a loss, you drop it by half until you make it back. Understanding the holidays, different times where it's going to be likely to be harder to trade, and then knowing how to navigate that, drop your risk, don't trade at all, whatever you feel you need to do personally. So all these things build clarity. It makes you more of a professional, makes you know when things are, more worthwhile, rather than just going in and just, letting excitement or ambition get ahead of the skill set, right? So, again, the whole goal of this channel is to build clarity in the people that come and are gracious enough to give me their time. And like I always say, everything that I talk about, although it may not always be super entertaining, I'm not here to entertain you. Okay, I'm here to be entertained by seeing you succeed. Okay, and help you get to where you're trying to go. So I feel, based on what I've been told recently and what I've been seeing in you guys, I think I am fulfilling that goal, which is, of course, the main reason why I even go live on YouTube. I could just be off YouTube, off social media. But I enjoy seeing you guys thrive. I enjoy giving back. So yeah, I'm grateful for you guys and the time you share with me. And I hope this has been, I hope it's a good experience when you guys hop on. And every time you hop on, you either see the repetitive nature, building the repetitive skill set that you have and anticipating similar things over and over, so it's less ambiguous. And I hope confidence is being built by you borrowing my, like the accuracy that I have, the process I share. And, I hope you guys just continue to make leaps in your learning. And again, if you guys ever have questions, let me know. I'm always here to answer questions. And just a reminder, if you guys do get value from the content, definitely don't forget to like the video, subscribe if you haven't already, and share this channel with anyone you think it could benefit, or share it with anyone you think that can add to the community. That is very much appreciated, because it not only helps the channel grow, but it's also going to help cultivate this amazing community. So yeah, thank you guys in advance. Fritz said also, I have noticed that in lower time frame consolidation, I see and recognize it is forming higher time frame swing. Yeah, exactly. In a way that you can really anticipate when those higher time frame swing points are going to take place. You want to make sure you're watching the higher time frame PD arrays. So, because when price delivers into those levels, many times there's a turning point that can either be a retracement or it can be a setup to continue going higher or lower, right? Depending on what you're looking at. But the story you see on the lower time frame is just a more detailed picture highlighting what is creating that higher time frame view in terms of the candle that's being printed. It's just like getting a microscope, going all the way in, seeing what elements or components create that daily bullish candle or bearish candle, or weekly bullish or bearish candle. It's one of those fascinating elements. At least for me, it's fascinating still to this day. So yeah, that idea that I mentioned over here, it delivered a pretty beautiful run higher, right? So the aggressive move that was identified, notice how it used the first presented fair value gap from Monday, right? So there's beautiful visual of why these levels are important to have in your chart. Although it may seem a little busy, if it does, you could just get a piece of paper and write it down, or do it however you feel is necessary. But you could see that this is beautiful, right? Just a beautiful delivery here. And then again, this high to that low created a balanced price range. Midpoint was never traded into, and it just kept moving. As long as that stayed intact, this move was worthwhile. More aggressive because of the fact that we're still in a day after a holiday vibe. But nonetheless, hopefully it made sense, as far as why it ran higher. So I'm still of the opinion that this retracement was just that. We have this previous day's high here. So my attention is here, at least for now. I'll remove this. DXY is still giving that little retracement. Still confident that we're going to continue. Nothing has changed. So yeah, we're going to stick to that. Sorry if my voice sounds a little raspy. I don't know if I'm getting sick. I have no idea. But yeah. So yeah, we've now shifted market structure here. It's pretty aggressively moving. I want to see how we respect this fair value gap here. See if it's going to respect it at all. If not, if we just slide on through, it's probably going to be turned into an inversion, and then maybe an area where, you know, price will use to then look to continue to jump and get up into this level. We got, see if we got an order block of some kind now. Go to the 2 hour. Well, we could see that there was a stop hunt here. The daily fair value gap is beautifully continuing to deliver and hold price. Erase that. Just clear it up a little bit for you guys. Where is that high in terms of the weekly candle? What are you referring to? The weekly candle for this week? We're talking about this week. It's going to be this high. You could simply go to the weekly time frame and just click on the highs or the lows, and that's a very easy way to get you the weekly highs and lows, or daily highs and lows, right? It's not really going to vary. It's going to be like this constantly. It's never going to change. Like, you know, this is going to be accurate. And then obviously if you want to go down and see a bit more detail, you can go down to like the 1 hour, see it from that perspective, see where that's at. But for the most part, it'll end up being pretty much the same. You know, so this high here, if you look at the range from this low, which is where the open was, to the high, that is the weekly range so far. So this high is not only a previous day's high from yesterday, but it is also, or wait, it's from this morning actually, but it's also the current weekly high. It's not going to probably stay there throughout the week, right? It may get blown out and a new high may be created, especially if we're going to continue going higher. I do like these relative equal highs up here. That's where my attention is. If we can get beyond this, I mean, that just looks pretty obvious if you ask me. And then of course we swept the lows here. There's not really any SMT either. I guess there was SMT here at these lows. Between the Dow. Because this is 5 a.m. on Friday. Maybe not. Maybe not. Regardless of whether there was an SMT here or not, buy side is still of interest, been of interest. And, you know, like we've been talking about, we're going to continue to stick to that unless proven otherwise. My little brother pointed out something that was very relevant. I think it was last week. I can't remember if it was down here. Maybe not. But this fair value gap came down. Price ended up, you know, displacing through it. So that created a balanced price range. And price respected that and continued on its march higher. I think we were looking at the Nasdaq when he pointed that out. Yeah, it doesn't look how I would like it to look for me to say that that's an example of that. But nonetheless, this fair value gap being overlapped with this fair value gap here, again, this high to that low created a balanced price range. Did it ever come back to the midpoint? No. Use this. It couldn't even come back into this as an inversion. And we're just still continuing to rampage higher. Now, what happens when we get above these other highs up here, obviously, we're going to have to see. Seems like, at least for now, that daily market maker buy model is still in play. Because we looked at it from the higher time frame, we've been able to continue to hold on to that opinion. And because we are rooted so strongly in the higher time frame, you know, it's much less stressful. You know, we're not flip-flopping over and over. Like, it's continuing to support that idea, so we're going to continue to support that idea as well. So yeah, we'll see what happens going into the open. We have 5 minutes. Let's see if anything changes or if it just continues to solidify further decline in the DXY and higher prices in the indices. Well, we can see this here. Okay, we could see that breaker, high, low, higher, high, overlapping fair value gaps. Notice how it has not been able to start pushing through into the middle portion of this. We got this bullish order block. You can also move up to this upper portion. These are consecutive down candles. Mark that as a bullish order block. Excuse me. So again, as long as we stay above this level, as long as we stay above the mid portion down here, which is pretty much the low of that breaker, which is pretty interesting observation, how that just beautifully encapsulates the height of that low. And the breaker, right, you could see that that's beautifully aligned with that midpoint. That's telling you something, right? That it's not random. That's too perfect for it to be random. So this height of that low, I'm going to anticipate being a balanced price range, possible bullish breaker here. And we will see if it can continue to hold on to that and give us some type of scenario to go higher or continue going into the open. We're going to see how the open's going to behave, right? Is it going to, maybe punch down one more time, sweep these people out? I would prefer it not to do that. But if it does do that, how do we behave if it does get down below that low? I could say that if we turn this breaker, or if we turn away from this and then it gets below the breaker, I would then look to try to frame something targeting the low down here, or potentially the fair value gap. So that would be the contingency plan if something obviously changes. So far, that's not the case, so I'm going to continue to want to justify potential runs back above the buy side up here. But again, even if that works out, my risk, because of my rules, is cut in half, 50% of what I normally use. So I encourage you to consider the same. Again, the same financial advice, right? Remember the disclaimer. You're going to do what you will. I'm teaching you to make your own decisions. So yeah, always keep that in mind. But yeah, so I hope it's clear as far as what we're looking for. We do see that price has given somewhat of a pretty aggressive decline there. Let me go back to the contract month. So yeah, we'll see what happens here. So yeah, let's see what this turns into. Again, because we were so aggressive in such a rush, I've talked about this before. When price starts right from the open and is just in a rush to get somewhere, sometimes that could be on purpose to try to pull people in and then it goes against them. Again, I don't really want to see this spend too much time in here, because again, it's a second stage distribution. That's my assumption. So if that's going to continue to be the case, we're going to want to see this scenario in here hold, because it just makes sense, right? It's in a bullish trend. We've swept sell side, hit a higher time frame PD array. We're in the potential higher time frame second stage distribution of the market maker buy model. We've been bullish. We've created this potential bullish breaker. These overlapping fair value gaps should present a balanced price range. The breaker itself should be a balanced price range. So, if that changes, if things start to go against that, because we have this so detailed and mapped out, right? If these levels or areas or concepts begin to get violated, there may be a chance for us to then adjust and seek sell side. That's obviously not part of the equation just yet. I just want you guys to understand my thinking, just in case, right? Because you never know. Nobody can come in guaranteed know, like, oh, I'm certain it's going to do this or do that. You can have a high probability of something doing something. Like, I think it's, somewhat reasonable for price to want to deliver off this. It is still the day after a holiday. So again, we'll see what happens. I'm going to still be on the side of this playing out. So that is what I'm hunting right now. If I find an opportunity that gets me in line with that, I will look to execute. I give myself one opportunity. If I do end up taking a trade the day before, day of, well, never the day of, the day before or day after a holiday, I always give myself only one chance if things align properly. If they don't, I just don't take a trade at all. And it's just the way it is. So, yeah. But yeah, I want to see what the behavior is going to be here. Can we get another displacement to push us back above? Can we stay above the mid portion of this potential higher time frame bullish breaker? Can we get ourselves back above this first presented fair value gap? Something I mention for the most part all the time is the overnight first 30-minute range as well, because that is important when it comes to assisting us in validation of particular things continuing in one direction or another. So yeah, let's go add that real quick for completeness sake. So as long as we could stay above this regular trading hours gap, this is a massive 300-point regular trading hours gap. So that is pretty interesting. It's a pretty reasonable gap. It could be something that could later on support the contingency, going from bullish to still slightly playing around with bearishness, digging a bit deeper. We'll see, obviously. But so far, we're above the first 30 minutes. We did fairly quickly run up to the first standard deviation of the central bank dealers range in the flout. So, yeah, we'll see if that may end up being the setup, or if we can look to run higher. Okay, again, for now, I'm going to be waiting till the macro comes out, because we've opened up pretty violently. So yeah, let's continue to watch. So yeah, something to consider, right? We have this run above the high. We basically, I think there's a fair value gap in there somewhere. Let's double check. Yeah, 15-minute or 10-minute. All right, so I hit that, rejected here. Now we're sweeping out some lows. We got this wick right here you want to pay attention to. So let's see how price behaves within that wick. Is it going to respect the midpoint of that? If it does, then again, these are signatures that we watch for price to want to continue in particular directions. Only way I would look to want to buy again is if we can get back above this high. This is not giving me any, excitement to want to buy yet. There was only one opportunity, and that was the aggressive buy in here. So for now, because we've now punched against the initial interest, which was to try to seek further buy side, we're now going to continue to monitor this and see if it's going to want to give us that contingency. I'm not going to run in there pushing it. You could make a argument if you did have an interest to want to go short. This is a run on stops. This is a strong shift in market structure. And this here was a fair value gap. Used the first presented fair value gap as well and rejected. You could have used that to target something very simple like the 50%. Not that I wanted to take that. Obviously that, is something that I missed. if I was going to consider taking a short. The shorts have been my contingency plan. This is definitely a likelihood, like I mentioned earlier, because of how quickly it ran. So for now, it seems like this is going to be in jeopardy here. So let's watch how this order block in here gets respected. See if it could stay below the wick here. And then see if maybe a fair value gap can form in there. You know, maybe give a retracement, maybe hit that. And then let's see if we can target the low. See if that can be something we could put on the table. Again, we're really, really close to the 6:30 open, day after a holiday. The initial buy side target or idea, overall framework, price traded a little too aggressive through that. So again, contingency plan is now potentially going to be my focus. I think at least for now, unless something dramatic happens and we displace above the high up here, I'm going to be focused on trying to target the low down here. But again, I'm not going to make any decision to execute until we get into a macro. I'm going to let this, delivery take place. You can make an argument here too that this consolidation had an accumulation, reaccumulation, smart money reversal, first stage distribution. Now, if this is going to deliver from this area and break this low in here, it should be able to do it in a fast-paced capacity, and blow through it if that's going to be a short idea. But yeah, this short in here, like I mentioned a second ago, obviously after the fact, was a pretty decent idea. So yeah, just was something that I wasn't interested in jumping into because of the fact that we're so close to the open. So there was that little small short-term change in state of delivery there. Price rallied up. You can actually make the argument here as well that this down movement here, followed by the run higher, breaking the low so aggressively, this may actually result in being a breaker as well. That is to say, if it wants to continue to go lower. Remember, because this may end up being a market maker sell model, if that is going to be justified, we don't want to see us spend too much time in this little accumulation area. We wouldn't want it to run back up here. We would want it to just deliver from here quickly and get down below the low. If your interest was in shorts, and we are in fact going to get down to there. Again, these are observations for me. Again, I'm going to wait till the 650 macro comes in, but these are some things to consider thinking about. Fix this camera real quick. So yeah, watch this fair value gap. See what the response is going to be. So yeah, pay attention here. We have hit this new week opening gap. Is that our current? No, it's a previous. It's supposed to be a grayed out. So yeah, the gray new week opening gap labels, they're previous new week opening gaps. The red ones are it's going to be the current one. For those of you that may be new. Remove that. So let's see how this behaves. Is it going to overlap? Right now, currently, what we see here is it's overlapping. Now, if a short was going to take place, if I was going to frame a short in this scenario, it would have to get back down below this fair value gap, use it as a inversion, and then potentially trade back into it. DXY, obviously, I would like to see it run higher if that's the case. And then I'd use that to try to then go down to the 30-second and try to see if I can find my model. Or you could be aggressive and execute that. I'm not saying that's something that I'm going to do right now. That's just something that is considered when this type of delivery takes place around fair value gaps. When it overlaps fair value gaps and then pushes away, whether that's overlapping it to the buy side, coming back, hitting it and running away, or overlapping it like this, getting back below it, then pushing away, generally it's not going to want to come back to that. It's going to use it as a fully delivered or rebalanced area of price. The key is the fact that it delivers through it, comes back to it, and then delivers away from it. That is when you can confirm, okay, this has been utilized enough. Maybe later on it may get traded back into, but in the moment, generally, when it pushes away after it does something like this, depending on where it pushes away to, that's generally going to be something supportive in terms of whatever direction. Say it gets above it and pushes up, that's supportive of price moving higher. Okay, and using it as a support level. If price breaks through it after doing this and then gets down below it, returns into it again, and then displaces to the downside, that is supportive. That's a supportive idea or signature for price to want to look to attack further sell side. That's the process of rebalancing. Just because it trades around it doesn't mean anything. It could do that forever. But what matters is what it does when it gets outside of it. If it breaks outside of it above and returns back into it, then displaces away to the buy side, that is a beautiful thing. If you're in a trade and you're trying to manage the trade, that's a beautiful signature, similar to how the wicks behave, or how order blocks are treated in terms of confirming a particular direction when you're managing a trade. All right, so we've traded inside this. We're still delivering within the second stage distribution to try to aim for the low here. This is not a long-term view. My long-term view is the higher time frame, as you guys know, and that is more supportive of trying to catch a run to the buy side whenever it shows it wants to do that. So now again, we're monitoring the behavior inside this fair value gap. We've already declined here. It's hit a new week opening gap. We've swept out lows here. You can imagine anyone that caught the buy up here has now been stopped out. So we're now monitoring this. There was a displacement right at the open. We're getting closer to the macro. So is that macro going to deliver us away from this fair value gap? Or is it going to just hang around in here and maybe wait till the silver bullet or 7 o'clock news event coming out? Because you can't forget that that's ahead of us right now. It's not like the craziest news event. It is related to FOMC, but yeah, you gotta keep tabs on that. So there's a bearish order block here on the daily. Bullish or a bearish order block here and a bullish order block here. So we're trapped in between those two. So I'm assuming, unless we're proven otherwise, that eventually this is going to be used to want to run higher. Now, if we get back inside the middle portion of this order block and just starts displacing through it, we could then look to target the wick quadrants, and then if it digs somewhat deep inside that, again we have these areas down here, and then we have the low. That's something we'll think about later if it presents us with an opportunity to favor that. But for now, again, we're just going to continue to see how that fair value gap I mentioned is going to be delivered in. Is it going to continue to overlap it and then close outside of it like it is right here and push away to the buy side, which we have relative equal highs in that direction, and then the higher time frame highs as well? Or is it going to look to trade below it, turn into an inversion, and then give us a scenario that we could then target the low? I'm going to continue to want to support the run higher. This is not something I'm fearful of, that doesn't sway me, because we're married to the higher time frame. So if we can see this turn into a displacement that gets above this high, we then have a pretty solid foundation from the higher time frame down to this lower time frame, regardless of the fact that this dug lower like this, to then look to try to target the buy side. Again, we're paying attention in here. Right? How is this going to behave? I believe that's the first presented fair value gap, if I'm not mistaken. Yeah, that's the first presented fair value gap. So that is, oops. So yeah, that makes that fair value gap even more important. So yeah, we got that first presented fair value gap. We got that regular trading hours gap down below. I'm not sure where the hell it went. Okay, it's right there. So yeah, there's the regular trading hours gap midpoint. We're now getting above. Oh, I guess that's the first presented fair value gap in there. Huh. Interesting. So yeah, I guess I was on the 2 minute. So yeah, that first presented fair value gap's in there. And now we're pushing kind of against this decline. Imagine all the people that saw what happened this morning and are stuck on the seconds chart, and they were pushing shorts aggressively, trying to, oh my gosh, it took off, I don't want to miss it. They're all now getting stopped out. We're delivering into this potential bearish breaker. So if we were to deliver from this bearish breaker, get us down below this first presented fair value gap, that would put my consideration in the fact that we may still look to continue dropping. But another thing, if we get above that high I mentioned, which is up here, we're displacing through that. And if we get above this bearish breaker here, we're starting to now build the narrative for trust, right? Oh, what's up, Harley? Hey, just want to shout this out. I didn't know he had a YouTube channel. Harley Trades down there in the chat. You guys want to go follow him. He is one of my superstar students. Amazing individual, amazing person, amazing trader. Definitely go support him if you support me. He is, man, if you guys haven't seen what he does, you will be fascinated. He is amazing and just will continue to thrive. So I appreciate you hopping on, Harley. He is in my private community, by the way. And yeah, just amazing, amazing, amazing. So yeah, go subscribe to his channel and support him if you haven't already. If you support my channel, definitely support his. He's definitely part of the family. He's going to become a pillar in the community, as he already has began to become. So yeah. So yeah, let's see what's going to continue to take place here. Again, there's this possible bearish breaker. Seems as though we are really trading against that. This huge decline in here. It's not really huge in the higher time frame, but this is a pretty sizable displacement. Again, the only way that I'm personally going to look to want to short is if we can then start to get down below this first presented fair value gap again. Otherwise, we're now above the first presented fair value gap. We're now above the regular trading hours gap, and we're above the overnight first 30 minutes of the daily range. Those are all good indications to me, given the higher time frame is still bullish. It's just been in a phase of retracement. If that stays intact, that's a good reason for me to continue to trust that buy side should continue. So yeah. What does the 4-hour candle look like in terms of 4-hour price action? Well, if you just take the 4-hour, right, the open of the 4-hour, Can't remember exactly what time that is, but just you just start from 12, go to 4, 8, so on and so forth. And if you take that window, right, put a line, horizontal line, or vertical line, I'm sorry, on the start to the end of the 4-hour ranges, you could then zoom in on those lower time frames and go see what the actual storyline is that created that 4-hour candle, because there's power of 3 there as well. Right, so yeah, look at that beautiful delivery back into this area in here, right? Seems as though we're going to continue, and you know, everything's pretty much aligning with our assumption that price is going to look to want to continue to blow out highs. So now we got a high here, sweep below this low, run above that high. This should create potential balanced price range, right? A rolling balanced price range, aside from these areas down here. So yeah, let's see if that's violated and that idea gets taken off the board. Again, it's gonna be something going against what we want to see it do if we're gonna trust it going higher. Breaking down below this low in a very aggressive fashion, and then getting below this first presented fair value gap again would put my assumption in the sell side we talked about earlier. We could see that this breaker here is from earlier on that higher time frame is being contested. Let's go identify that again. Well, it's actually delivering, not being contested. It's actually delivering through it. How we would like to see if it's going to continue and be something supportive for buy side delivery. This up candle. Sorry if it looks a little bit busy. But yeah, my attention is right here. Whoops. So this up candle, low, high. If we could push again and get back above it, we're currently trading inside of it, but getting above that, returning back into that level, the upper portion, that would be a pretty good scenario for us to continue marching higher. We do have, again, this order block here and this order block here. So we're pretty much doing a little dance in between these daily bullish and bearish order blocks. It's kind of stuck, literally smack in between. So, I'm going to continue to support the higher time frame, which is continuing to buy. But yeah, we have our contingencies and areas of validation I've just laid out. So if that does, end up giving us a displacement here, and it starts to attack these levels, specifically below this first presented fair value gap, I would then look to potentially look to frame a short. Otherwise, I'm still interested in us continuing to run higher. And I would just see this huge decline here relative to this time frame as a reach into the new week opening gap to then set up a displacement to get us up to the buy side. If you drop down to the seconds charts, you can kind of see that there's been some reasonable ideas to frame out a buy. This here, this low being taken here, displacement above this high, this return into this first presented fair value gap, overlapping that, that created a breaker, order block, and a return to the first presented fair value gap, which delivered to the buy side, reaching into these upper levels here I've been talking about. Again, I would like to see us get above this high, because that is I think the 5-minute high. Wait, no. That's this high I was talking about earlier. If this is broken, that's a shift in market structure. And then, of course, we could use the upper wick. We could use the fact that it invalidates or violates trading through this breaker candle, right, or sequence of candles. And then, of course, from this low to that high, the middle portion of that should hold up if it was going to favor shorts, because all that stuff gets violated if we break through this high. Again, it's just continuing to build the narrative to trust buy-side delivery. And then, of course, we have very obvious equal highs up here to target, which has been the main target throughout the whole morning. aside from the contingency plan if that was to fail. But yeah, so far, beautiful. Now notice that we're inside of a macro. Now it's picking up. So now I'm going to remove this breaker. So let's see if we could stay above that and continue to march on higher. Well, we now have this fair value gap in here. We're above the first presented fair value gap. We're above the first 30 minutes overnight range, and we're above the regular trading hours gap. And you could see how us staying above those levels, using that as a tool, of course we do deliver up here. You could see how that stuff helps really build the narrative aside from everything else that we talk about. Got a fair value gap in here. Let's see how price delivers within that. Maybe something fruitful for us to anticipate. So let's see what happens. So there's S&P at the lows, right? So that's a good indication for buy side delivery. We'll see if that wants to hold up, obviously. We do have relative equal lows down here on the S&P. That is a bit concerning. But again, we have that SMT here, so this may make this unnecessary or something that may get used later on. Yeah, we'll see. Prices basically went back and forth since the overnight, since yesterday in Asia. So, low here, high here, came all the way almost back to the low. Anyone that was in this trade or took an opportunity in there was either sweating bullets, exited early, or got stopped out. Because they probably saw this run higher here and moved their stop to there. So, yeah. So, yeah, what am I favoring? I'm favoring price wanting to seek buy side liquidity still. That has not been proven incorrect. If anything, the stuff that we have seen so far has been supportive of that. We can see, again, that from the low to the high, we're kind of just dancing inside that range, right? We left equal highs up here. I mean, there could be an argument that these are relative equal lows. But again, in order for me to want to seek sell side, go against my narrative, which, those of you that know, I stick to my higher time frame, regardless of what's showing in the lower time frame until proven otherwise. But because that fact, we're going to continue to want to support buy side, just so there's no confusion. That's been the assumption since the start of the call. We painted pictures for both sides just in case, but I've made it very clear that the main focus, as I always do, is one side of the market. But you always got to be able to consider or put yourself in the perspective of the other traders that want to go the other way and see what would cause them to want to take in this case, a short opposed to a buy, right? Because if you could do that, you can get a pretty solid understanding. You want to think about Sun Tzu, right? You want to be able to get into the mind of your enemy. And a lot of times the battle is won before the battle starts, right? Before the battle started or a decision was made, we were able to strategize ahead of either direction being delivered based on data that we've already accumulated and opinions that we've made for, the last 2 weeks. And so far, it's served us pretty well currently. We've painted a couple of different opportunities. Blowing out this high would be a very reasonable target, and if you were only able to take something from here up to the highs or just from here to there, I mean, that's already the minimums, right? 38 points. Go from this low to that high, 40 points now. And see if it can blow that high out. There it is. So yeah, pretty amazing how we can just get on and call the market the way we do every single week. And in my private community, every single day. Okay. It's just amazing how this stuff just, hopefully this stuff makes crystal clear sense. My thinking, I try to do a good job of being very, very descriptive and paying attention to the most salient things. I just want to highlight one more thing as well. I just want to add something based on something I talked about earlier. The first 30 minutes overnight range, getting above the regular trading hours gap, and staying above the first presented fair value gap of the current day. I mean, right now, this is again, I can't even count how many times it's already been shown, but this yet again is a very simplistic way to confirm or assist you in trusting and building clarity behind, when you're in a trade or even before you're in a trade. This supports the idea, in this case, going to the buy side. Okay? It's a very easy way to view things, aside from the 3 PDA rule for the validation and validation, and then our overall process for bias and narrative, right? Which, many of the elements are shared on YouTube. Enough is shared. Everything, excuse me, everything has further depths that you could take it, right? But it doesn't have to be overly complex. Now, if you are a obsessive individual like I am, then obviously, going that extra mile may be something you're interested in. And if that's something you're interested in and you're not in my private community, that's always there. But again, for the most part, what I talk about on YouTube, many of you guys have seen over the last couple months. I mean, it's just spectacular, and getting more advanced for many people is not fully necessary, because we have all the important questions answered just on YouTube. But, there's always an extra mile you can run, especially in this, But again, whatever your goals are, I'm pretty confident, given the feedback I've received, a lot of it can be achieved on YouTube just by showing up here. But if you need more support, again, there's always that option to join the private community. That is a very exclusive community. It's only for those that are obsessed over trading and want to make this, they want to take it even further, and they need more support, more access, and just want to be around people that have not only learned the same concepts from ICT, but have also been able to take what it is that I talk about and also used it to their benefit, in some cases at a mastery level already. For example, Harley, right? I just want to mention him again. He has blown my mind since we met, and he hasn't been trading, as far as I'm aware, more than 2 years, maybe a little bit over a year. And he is just spectacular, so I give him a lot of flowers all the time, hype him up all the time, because he deserves it, because he's hardworking. He's a young guy, and I wish I had this when I was younger. I really do. I'm not that old, right? I'm 30, but time flies, and the decisions you make today, especially in trading or any other career, the fruits of your decisions now will be felt 5-10 years from now, and it's going to come faster than you could ever imagine. So you might as well really dig in and take this as serious as it needs to be taken, because it is well worth it. You hop on and see what I'm doing here. You see how consistent I am in calling the market. You see the things I identify work out. When it doesn't work out, it's very clear as far as why, because I break it down. But my ability to do what I do on such a consistent basis is a direct product of the things that I share with you guys and how much time I have poured into this. I made trading my life. When I first started, I didn't have anything else I was passionate about in life other than sports. That didn't work out. So after high school, I didn't know what the hell I was going to do. I didn't know what direction I was going to go. I didn't really have many good influences around me. I didn't really have anyone talking about trading, about investing, building wealth, business, anything. So I had to figure it out on my own. Once I got a taste of trading and then, discovered everything about it, it became one of the pillars of my life. So many of you guys may feel the same way, and if that's the case, you're in the right place. You're around the right people. And, that's why this community is not going to be for everybody, especially my private community. It's going to be for those that truly want to make this something. It's going to be for those that truly want to make this a huge part of their life. And, those that spend time here, even just on YouTube, discover that, our little corner of the internet is something special. It may not be massive, like in terms of following, and that's okay. If it stays this big, so be it. If it grows, so be it. But regardless, at some point, no community other than ICT's charter community is going to be able to outtrade any of us. We already outtrade most people that have hundreds of thousands of subscribers, so yeah. I'm grateful to have you guys here, and I hope that the things you see happening on a regular basis really get you motivated and confident in yourself, that for one, you're in the right place, but two, it can also happen for you. All right, so Harley said, I'm so grateful I have this now. Everyone has the information these days. The work just, yeah, exactly, bro. Exactly. You are so lucky. I'm jealous. You have such an amazing life ahead of you, brother. And Fritz, appreciate you hopping on. Hope you got value, and I hope you have a good day. I'll see you on Sunday. And yeah. Matter of fact, I forgot to go do something. Yeah, Harley, I'm trying to see you post some stuff, bro. Show the world what you've been able to do. At least what you're comfortable with showing. Yeah, for sure. For sure, Fritz. But yeah, have a good day, brother. But yeah, if you guys, I just want to remind you all, one more time, if you get value from what we do, if you've learned anything, if you feel that what's shared here is something worthwhile, definitely don't forget to like the video, subscribe to the channel, share this channel with anyone you think can benefit or bring value to the community. That way the best of the best end up coming here, and everyone's kind of tight knit, and it just becomes a really good, helpful, supportive, dynamic community. It's much appreciated. Again, thank you guys in advance for doing that and liking the video, and leaving your comments and subscribing and sharing. Obviously, it helps YouTube know that what we do here is important, so then we can reach more people that need help just like you guys. It doesn't have to be a large community, but I do want to be able to get in front of the people that need the help, that just maybe are in a dark place in trading, and they just need that person that could come and step in the way, so they don't quit. Because quitting this industry is heartbreaking, because most of the time people are quitting for reasons that are totally unnecessary, like false expectations. They just don't have the right guidance. You guys came here, and hopefully you guys have been getting value, and those of you that have gotten value, that same value I want to share with others. And then your stories, I want them to see your stories too, because not only is it helpful and encouraging to be in a community like the one we have, it's also extremely, extremely encouraging, as you guys probably know, to be in a community that you can see others thriving just like you, not just one persona or person or influencer thriving. If there's a whole congregation of people that are just crushing it in ways that are very unique, because not many people on social media, especially on YouTube, most people aren't doing things the way that we're doing them, especially in my private community. Most people want massive volume. I want quality people. Most people want huge followings. I just want to help anyone that can hear, or anyone that wants to give me their ear so they can, benefit. Because, I blew accounts. I don't even know how many accounts I've blown in my career. It's been almost 4 years now since I've blown an account, which I'm thankful for. Lots of that credit goes to ICT and some of the charter students that were there to help me. Really, really understand the realities of trading, so I didn't have to spend too much time there. But again, that's part of the reason why I do what I do and I teach the way I teach, and it's also a reason why I want to get in front of quality people and the people that truly take this serious, because those people, I personally don't want people to miss the opportunity, especially if they're good people, right? Like every one of you guys that supports the channel are amazing people. I've had conversations with each of you. And you guys are passionate, hardworking. You guys just want to succeed. And you appreciate, the community. You appreciate what's shared, and, you make it known. So I want to help you guys help others. But I also need your help so that I can get in front of people that I can bring into the camp, and so they can benefit not only from me but from you guys too, because you guys are just as much of an asset to the community as I am. I may be the one out here calling the market. Most of you guys call the market and send me screenshots before I even talk about anything. So you guys are really improving, and some of you guys are on your way to hitting that type of level. And once you're able to call things before I even say them, once you're able to call things and then go look at ICT stuff and then he called the same thing or something similar, that's a graduation for you. That's independence. That's you knowing for a fact that you're becoming an independent, self-reliant trader that's going to be able to, take this to heights that you can't even imagine. What you think right now, the goals you have right now, they're too small. They may not seem too small right now. They may seem unbelievably hard and almost impossible just to be consistent in a small amount, let alone a huge amount. But you're not going to stay there forever. And you're going to realize that anything that you thought of at the beginning, as ICT has mentioned, you're going to look back and think, man, I was thinking way too small. We have to think small at first, because we got, bridges we have to cross, skill sets to learn, things we have to overcome, and development we have to do within ourselves as traders. But, eventually time will pass, and, you want to spend your time wisely, and, eventually if you do the right things, you guys are already around the right people, you already have the right information. So now, it's just going to be up to you to continue to learn, continue to implement the things that you see, and ask questions, do whatever you can to get the problems situated and solved that you're dealing with, and use the resources at your disposal. And then again, maybe eventually you guys can help me help other people as well. Whether that's bringing people in, or sharing the content, getting it in front of people, or helping me, reach more good people so that we can, as a team, help them. They come here, they watch me call the market. You guys are in the chat also helping me, provide value to others while you're also getting provided value on a regular basis. So it's just like a constant cycle of just like improvement for everybody. And me helping you guys, believe it or not, helps me become a better mentor. It helps me continuously refine the things that I do, and continuously helps me just also be better. So it's just, like I said, it's a cycle of just continuous value being shared. You don't have to be ICT to have value. Each of us has value. Our perspectives have value. You may ask a question that I never thought of, which then makes me a better mentor, which makes my perspective also enhance, So, just because you're maybe not where you want to be, doesn't mean you don't have value and that you shouldn't value your own opinion. Each and every one of you guys has a massive amount of value, much more value coming in the future, obviously, as you improve and become who you're trying to become. But, you know, if you're ever hesitant to ask a question, don't be. You know, if you ever think, you know, negatively about something you're wanting to ask, but you don't know if it's like, you know, a good question, don't hesitate. Just ask questions. You know, because, you know, you never know. You asking questions, me answering the question is going to help somebody else feel confident to ask questions. And then the question you have may also answer their question. And it's, again, just a cycle of assistance. And that's why, you know, I always say invite people that you think can either get value or provide value. Because, again, that's the culture I'm trying to build here. And I feel so far, we as a group have been doing a pretty phenomenal job at doing that. You know, it's not the biggest community, but in my opinion, from what I've seen, from the results I've seen my students have, from the results, you know, on my end, from the way that we call the market, we outtrade majority of people on social media. You know, I mean, there was one time Tony pointed it out. I think it was during like an FOMC event or close to it, where, you know, we called a couple trades and they worked out, and Tony shouted out the fact that he was looking at other people's streams and multiple people were blowing their accounts on stream or just getting totally annihilated while we were simply in and out and, you know, had a profitable engagement. I've had a couple other students also mention that on a regular basis. They're like, I watch this person and, you know, I watch you and I just see how you navigate and how they're getting crushed. And it's just, there's no comparison. You know, though, you know, the difference is, you know, like the reason why they have bigger followings is most of the time because they're renting Lambos. You know, and I have no interest in doing that. You know, even if this community only gets to 10,000 subscribers or 5,000 subscribers, you know, there's only like 20 to 100 people that join eventually on a regular basis with me live. I mean, that's enough. I mean, that's 20 souls that are going to be helped that can then go and help other people, you know? So it's bigger than just being able to trade for me, you know? It's, you know, the impact is something I'm really chasing after. And so far we've been able to help a really good amount of people. And you guys are part of that group. And, you know, I've also had comments about the comments that you guys share in the chat here, let alone in my private community. I've had a lot about that community as well. But again, you guys are already providing value to people with the questions, the confidence in asking questions, the transparency, sharing your issues and hardships. Like Tony, you know, he shared something he went through a couple of days ago. And I had a comment from someone on Instagram that said that they were thankful that my community is so open, that I'm so open that, you know, they now feel comfortable with being open as well, so then they can ask the questions and improve, you know, and have the confidence to voice these things. Because it helps too to have somewhere to go that people understand the problems we face. Because you can't talk to your family about it. You can't talk to your friends about it. They'll just tell you not to do it. They'll say it's a scam. They'll say you're wasting your time. They'll try to convince you in every way to try to protect you from something that may be kind of difficult to go through it at the beginning. You know? So again, it's another reason why this is such an asset, you know? And that goes for everybody, including myself, you know? It's good to have people around that understand, that are interested in this industry just as much as I am, right? So, yeah. So I'm grateful for that, you know. So, yeah, this buy-side delivery has been spectacular, absolutely phenomenal. And, you know, as always, just to make sure everybody knows that we ain't playing games around here. Let me pull this up real quick. For those that want proof. Here's your proof. Trade of 8, top step. 45 and 3/4. Exactly what I told you guys about. And look, you see any other trades? Do you see any other trades? No. It's the first trade of the week. So yeah. I don't give signals, but today was probably... Today and one other day last week was something fairly close to a signal. I mean, what I'm calling bias and narrative, if you're a swing trader, I mean, you're getting signals nonstop. You know, and like I always question like why I don't swing trade. Like why don't I add that to what I do? I don't know. You know, maybe that'll change eventually. Who knows? But yeah. Man, Harley, you're crushing it too, bro. You are absolutely destroying it as well. You get bigger trades than me sometimes. It's amazing. Yeah, again, you guys, don't forget to follow Harley. He will eventually be posting videos. And, you know, whatever he chooses to share, I'm sure it is going to be more than worthwhile. You know, so definitely go show his page some love before he starts, you know, taking over. Because if he continues, he's about to take over. He's about to, man, it's definitely incredible. So, yeah. Do you guys have any questions? We pretty much just jumped into an amazing entry. Talked about the whole entire framework, everything that led us to that assumption. Hopefully all that stuff makes sense. But in regards to the different elements that we've talked about that brought us to the decision we made about trusting this run higher and why, you know, everything from the start to when we executed. Do you guys have any questions about any elements that was discussed today? Just let me know. Tony said Sunday was needed. Yeah, we had a pretty important conversation on Sunday. Tony said this is his love and passion. He's always open to learning. That's why you're going to do amazing, bro. That's why you, my friend, are going to be something spectacular. You know, there's going to come a point in time where we have so many savages in this community. I mean, it's already pretty incredible, the amount of people that we have that, you know, were struggling before they came either to my YouTube channel or my private community, and they are now just crushing it. I had one student this year that quit his job. Like, it's pretty amazing. Like, it's mind-blowing. To take that leap is something you have to really have something to trust behind you, and a confidence that most people won't understand, because it's a different ball game when you become a full-time trader. It's a whole new level of mentorship that's needed, because there's things that you're gonna come across. Preferably you get that mentorship before, like that guidance before you go full-time. But you know, it's gonna be different for everybody. Not everybody's going to be able to be full-time, you know. But then, you know, there's going to be a lot of people that are. The only difference is obviously the trust. Do you have things that you can trust? Do you have a process in place that makes it so systematic that no matter what happens in your life, whether it's a death in the family, whether it's some other type of tragedy that takes place, whether it's a breakup, whether it's, you know, political chaos that, you know, affects the world, okay, whatever the case may be, whether it's friendships you lose, just normal life things, you know, if it's systematic enough, which is something I teach about, none of that stuff will sway you. I don't care how I woke up this morning. I don't care how I felt yesterday. I don't care how my week has been. Okay, I don't care who said what to me. I don't care about haters on social media. I don't care about anything enough to allow it to break my system. And that conviction behind my system has come from all the years I have been trading. It's not something that just magically occurred. It came from me studying each element I talk about in such great detail that, and writing it out, making PDFs for myself based on my model, my perspective, my struggles, my strengths, the times in price where I've struggled, the moments in price or moments during the year, during the months that I've thrived in, identifying those things, paying attention to how important risk management is, building systems around those processes, trial and error with those processes, figuring out where I'm most comfortable. It took all these years for me to have something like that. And, that's something that is, it's going to be different for everybody. And the ability to have a system that can basically make you emotionless in a sense. Not that I don't get excited, not that I don't, feel like frustrated sometimes, even with the system. But the more organized you can have things, the better it'll be. If your goal is to be a full-time trader, you need to understand that this is life or death situation, okay, to have this perspective in place. And the skill set of systematizing everything so much so that, it doesn't matter what happens to you, you're going to follow the system. If the entry's there, you're going to take it. If you take a loss, you're going to move on to the next one because the system will play out. You can imagine that comes from you having so much trust in what it is that you're doing that you're just, it's unwavering. And that only comes through time. First, you have to get the right education, information, know what's important. You have to have the right mindset, right? You have to have experience, okay? All that stuff can be reinforced by being around the right people, which you guys are. And a lot of you guys, have fairly quickly noticed how helpful that is. The different perspectives we talk about, the different ways of thinking, right? Like, for example, taking a loss. How do you look at that? Do you beat yourself up, right? Are you just completely obliterating your confidence every single time you take a loss when losing is part of the game, right? If we don't have someone there to tell us certain things that we're just not aware of, like what the right mindset is around losses, things about psychology that we may not understand because we lack experience. If we don't have that stuff, we got to learn it through experience, and that takes time. But that's where being around the right people and someone that's willing to help you, that's done it, that proves they can do it, that has information worth listening to. That's why that becomes so important. It fast tracks you in terms of some elements, but there's going to still be some elements that you're going to have to endure on your own, And then of course we have our own issues, right? Are you disciplined, right? Or do you just like to break the rules all the time? You don't want to be told what to do, right? Are you able to admit when you're wrong? Do you accept the fact that you need to reflect and track everything in order to, be able to succeed? Cosmo, we just went through an hour or 2 hours now of basically me talking about what led us up to this execution. I would definitely encourage you to watch the replay because it's going to just be a whole lot I have to explain to get you to understand why this one execution was the one that we took. I definitely encourage you to do that. I'm assuming you're new, and if you are, welcome. Generally we go live around 6 o'clock. Sometimes like today I get on a little earlier just because I wanted to talk about certain stuff about the condition, what we're going to expect the day after a holiday, how we need to view things. So there is a ton of things I would encourage you to go review from this video, and many of my other lives too. I also go live on Sundays, every single Sunday without fail, unless something happens. which is where we lay the groundwork, which leads up to things like this. Okay, and that'll make a lot more sense as you spend more time here. But yeah, definitely encourage you to go watch that replay. It'll serve you a lot better for you to go do that. Yeah, appreciate the question, and I appreciate you hopping on. But yeah, so do you guys have any questions in terms of any of the elements that we've already discussed? Otherwise, I think we will put a ribbon on it early today, because we pretty much navigated the entire run. Buy-side liquidity pool we outlined was beautifully taken out. The manipulation that took place, we walked through that, anticipated the contingency plan, identified certain elements that helped us build confidence in the bias running higher, kicking back in line with that higher time frame narrative we've been talking about since Sunday. And Tony, yeah, I know. Wow, it happened today too. You were watching people stream. They got smashed. That's hilarious. Oh man. Yo, can you send me some of the channels you watch that you see us go completely against, but then we're right and they're wrong? Harley took the same trade. Lovely price action. Yeah, Harley, I would have to agree, brother. Harley, you know the vibes. I'm proud of you, bro. Just want to tell you once again, extremely proud of you. You are the definition of just like someone that's going to be amazing in this industry. You really are. You got the calm mindset. You're young. You're motivated. You listen to good advice. You're willing to admit when you're wrong. I mean, you just have all the components, And a lot of you guys are well on your way to that exact persona as well. Pretty much all of you guys have those characteristics. Some have others. Some have more experience. Some have, a couple issues they got to fix in order to get better. But, eventually, once you overcome the things that you can identify that are stopping you, Harley is a wonderful, wonderful example of a product of that, and taking it serious. So, yeah, no worries, Harley. Thanks again for you hopping on and being the person and trader you are and doing the things that you do. It's been truly inspiring to me. So yeah, appreciate you hopping on and always chiming in, both here and in the private community. Yeah, no worries, Tony. But yeah, I guess we'll call it a day. Again, I appreciate you guys hopping on. It seems like more and more people are getting on, which I'm grateful for. Again, just one final reminder, if you do get value from the content, if you like what we do here, definitely like the video, subscribe. I appreciate you leaving comments. I always love getting questions and updates from you guys. I like to know where you guys are at, and what you guys are thinking, and how I can help you more and serve you best. And again, if you guys have anybody you think can add to the conversations on a regular basis, or anyone that you think can get value from what it is that we do here, not only from me, but those that can get value from you guys as well, definitely invite them, even if it's just people on social media, or if it's people in real life. That's always good too, because then you can kind of connect with them and put them in position, just as you've been put in position to succeed, and witness just how doable this is. Excuse me. So yeah, I appreciate you guys in advance for doing that. And just one more emphasis on what we've done today. We were able to capture this large run higher, at least a chunk of it. All I wanted to do was catch the minimums. I ended up catching 45 3/4. My student Harley also knocked down a very similar entry. And then I'm not sure if anyone else was able to execute, but we laid out so many details as far as why we took this entry, why we were favoring buy side over sell side, what would have turned us from buy side to sell side, and everything in between. So this is, again, a wonderful video for you guys to go and review, which is generally the case. The things that we talk about in these videos are extremely important. Every single element is covered, from when we start, what we're looking at, what's important, how we're going to get bias and narrative, all the way up until possible executions, which I kind of hint at, because I'm not licensed to give you trade advice. But for the most part, you put 2 and 2 together, you'll see how effective and helpful this stuff is for those of you that are new. But yeah, so with that being said, thanks again for hopping on, you guys. God bless each and every one of you. I'm grateful for the time you guys share with me, because you could be watching anyone else, but you're here watching me on a regular basis. And those of you that are new, welcome. We go live every Tuesday and every Sunday. Sunday is weekly prep calls and any type of extra questions that anybody has. And then, of course, Tuesdays are what you guys have seen today, which is us putting that stuff into practice and getting down and dirty with how we're going to find some headshots. So yeah, that being said, once again, thank you guys for hopping on. I will see most of you guys, hopefully all of you guys, on this Sunday as we look to prepare and crush the market. I also have a free Discord and a private community if those are things you'd be interested in. Link is in the description for each of those. So yeah, just go check that out, see what that has to offer. And yeah, if you have any questions, DM me. If you have any questions about trading, either DM me on social media or leave some comments, and I'd be happy to help you out. But yeah, again, thank you guys so much for your time. God bless, and I hope you guys have a safe rest of your week. Definitely don't forget to join the free Discord if you aren't already. All right, so yeah, take care, you guys. I'll talk to y'all on the next one.